than just business news, we're news for business people.
Welcome back. You're watching Indian Open right here on Bloomberg Quint. My name is Shah, and let's take a look at how the Asian markets are faring at this point. Some bit of green, maybe mixed signals really from the rest of the Asian bourses. Nikkei too, not really gung-ho. The SGX Nifty though, pointing towards 0.5% uptick. Let's wait and watch. There's a bit of a sell-off post the policy yesterday, especially in the Nifty buying, not so much in the headline numbers, but those two came off a bit. So some bit of a recovery there. Let's wait and watch if this lasts or no. It seemed like a morning of recovery yesterday as well, and then it got sold into. Okay, before we move full tilt to equities, I think it's important to bring in a factor which will impact some of the equity stocks and equity markets as well, and that's the commodity space, which is correcting because of what's happening to the dollar. I presume Jayesh is here with a quick update of how commodity markets are trading at this hour. Good morning, Jayesh.
Morning, Neeraj. So rightly mentioned, the dollar index is actually weighing in on the precious metal space, but oil too was impacted, and some other reasons that we are picking up for that. So oil overnight posted its biggest loss for over 2 months. In fact, both WTI and Brent slumped more than 2% each, and in early Asian hours, we are seeing another 0.3 to 0.4% downtick for oil prices. Primary reason for this downfall was the weekly output number, which came in overnight. That actually topped more than 10 million barrels for one day for the first time in history. So that was the negative for the oil markets. But coming to the precious metal and base metal space, the dollar index actually weighed in on both of these precious and base metals by trading higher for 5 days in a row. In fact, gold corrected more than 1% overnight, which was the first time since December 7 that we saw a 1% correction for gold prices, and now trading below the 1320 per ounce mark. The LME base metal index too declined more than 2%. The top loser, which was nickel, that actually declined more than 4%. Copper was down more than 3%. Zinc 2% shared over there as well. Other names like aluminium, lead, and tin too ended lower on the London Metal Exchange. And similar cues can be seen in the Shanghai Futures Exchange, where most of these base metals are trading with a negative bias, except for aluminium.
Okay, Jayesh, many thanks for putting that into perspective. Maybe some commodity-related stocks too could be active in the session today. Let's take a look at the derivative space though. Full tilt towards the day's trade and equities trade. Start off with Agam Vakil, who's standing by with the FNS setup for the morning. Good morning, Agam.
Good morning, Neeraj. Well, not too much to speak for, considering at least as far as the Nifty is concerned, we saw about a 0.2% decline, which is why we've also seen not too much change in the open interest. There you have it. But when it comes to the Nifty Bank, it did show deeper cuts than the Nifty, and we've also seen about near 8.5% increase in open interest. That's largely towards shorts. Now, the India Volatility Index has come off, still around the mark of around 19.5, so still in the danger zone, so to speak, according to a lot of analysts. But the Nifty put-call ratio continues to hover around the mark of 1.4 now. In terms of the kind of changes that we've seen in open interest yesterday, was more writing in the 11,000 and the 10,800 calls, and in the far end, about 10,000 puts. So we're likely to see more resistance around the 10,800 mark for now. And we do also have GMR Infra, which moves into the band, so expected restricted trade there. But we've seen plenty of longs building up in stocks like Voltas, as well as some strength coming in counters such as Dish TV. Of course, on the losing end, we also had some weakness in PC Jeweler, which saw near 10% increase in open interest. So we'll be watching out for these stocks, as well as the benchmark indices specifically, and where they take us in today's job trade.
Okay. Many thanks for that, Agam. Let's get in Abhijit Phatak, Director at Definite Solutions, who joins us on the show every day at this time to talk about his thoughts on how the markets could shape up. Abhijit, save for the last 20-odd minutes, the markets were pretty okay yesterday. And again, not that there were some deep gashes, just that the Nifty Bank corrected. But the interesting bit, Abhijit, according to me at least, and please correct me if I'm wrong here, the first time in this month that we saw some fresh short positions on the Nifty Bank. Hitherto, it always seemed like there was some long unwinding that was happening.
Good morning, Neeraj. Actually, I'm not too worried about what happened yesterday in the last half an hour because it was, I mean, there are people who take positions for the bank, the RBI policy, and this reaction might be because of, I mean, sometimes it is sell on news kind of thing. So what happens today has to be seen and not what happened in the last half an hour yesterday. But having said that, at the same time, Nifty is not crossing 10,000. In fact, yesterday's high, it opened and then drifted down towards, I think, almost 180 points from the high. And so it has a support near 10,400, and yesterday's high becomes a resistance. So it might remain range bound between these two for some time. That is what I guess from the charts.
Okay. What about the position build up, Abhijit, especially in the Nifty Bank, the fresh shorts? I think the OI went up to the tune of 8%.
Yeah, as I said, I'm not too worried about that. We'll have to see what happens. We'll have to see what happens today because I mean, Bank Nifty has rallied something like almost 1,000 points from the panic low, and this might be just a retracement. So we have to see what happens today and not jump to conclusions based on the open interest built up yesterday.
Fair call. How are you seeing the positions in the IT space, Abhijit? For all the fanfare, the last 3 or 4 days have seen some intense selling selectively within large cap IT, if not mid cap IT.
In fact, yes, that is one of my calls today. Okay. TCS is looking quite good, and on any dip near 2930, 2950 futures, it is good to go long with the stop loss below 2900, and it can go back towards 3000 or maybe 3050. It has, I mean, it has just retraced what it has gained quite a lot in the last month in January. So it is just giving a pullback. I'm not too worried about the weakness. In fact, it's just a pullback correction.
Okay, so okay. Now, the other set of stocks, and both of them commodity linked, Abhijit. Yesterday, some of the commodity names, base commodities as well as cement too, came under a fair bit of pressure. We know what the dollar is doing today and the resultant impact on the commodities on the LME. Do you track that space and the correlation between equities and commodities thereof? And if based on that, if there are any strategies that you formed?
I have been tracking the dollar index, and I don't think dollar index has become, I mean, I don't think it has reversed. It needs to close about 92, 93 for it to be strong, and I still think it will come back and test the previous lows, and then commodities will again, should again become strong. And in fact, one of the stocks which I have been always talking about is Hindalco. It has a good support near 230, 235, and as long as that is held, Hindalco can be bullish in the coming days.
Okay, my last question, Abhijit, today is on oil marketing companies and particularly HPCL. What did you see in terms of positions there? Is there a trade call here?
It has resistance near 400, which has been quite a big resistance for the last 1 month. So unless it crosses above 400, in fact yesterday it tried to cross once again, and it has not crossed. So in fact it can be a short near 400 with a stop loss of something like 5 to 7 rupees, and a long only on a close above 400, 405.
Okay, Abhijit, we'll leave it at that. Thanks so much for taking the time out and joining in and giving us your perspectives. That Abhijit Pathak with his derivative thoughts and his chart thoughts as well. Let's talk fundamentals and get in Gaurang Shah, head of investment strategy at Geojit, joins us right now on the show. Gaurang, good morning. Thanks so much for joining in. Gaurang, did you have a chance to look at the Taro numbers? Very weak Q3. I was just listening to Darshan and the miss that Taro has had and the possibility of a weak opening on Sun Pharma. But the opening notwithstanding, what does this performance mean overall for Sun Pharma as a whole?
Morning, Neeraj, and morning to all the viewers. You know, Taro is one of the reasons, Neeraj, why we have turned negative on Sun Pharma. And this is not the first time. Last quarter as well, if you just reflect upon, there was a huge disappointment. And this disappointment from Taro has come at a historical low, if I'm not mistaken, since the acquisition of Taro was made by Sun Pharma. And our sense is that despite that, you know, likely resolution or positive news from the US FDA for the Helios facility and one of their other facilities in Gujarat, I think the problem does not end. And the fact of the matter is that from the lows of somewhere close to about 400 or thereabout, the stock has rallied significantly to a higher level. I would not be surprised if the stock corrects this morning, and I would advise all investors in Sun Pharma to lighten up the stock on rallies. And as an alternative, if you are a hardcore fan of pharma, we would prefer Natco, Aurobindo, Cipla, which came out with numbers yesterday. Even Aurobindo came out with numbers yesterday. Lupin, after the numbers, again, looks a little bit positive and looks like the downside is protected. Stride Sassoon, Granules India, that's one of the, mid cap or small cap, whatever you want to call it. These would be the preferred names wherein we would advise buying even something like an Aarti Drugs. Neeraj looks quite attractive.
Interesting you mentioned Natco. Clearly yesterday's stock reaction, maybe not necessarily only to numbers, but to the run rate in Copac zone, weighing in on the stock. It was down about 8% yesterday, Gaurang.
This is not the first time again, Neeraj, and we would definitely concur with the management view about their squeeze on the margin front and business as far as the overseas market is concerned. But let us understand one thing, companies like, sorry, it was not Aarti, it was Ajanta Pharma that I mentioned earlier. Companies like Ajanta Pharma, Natco, Aurobindo, these companies work in areas which are, high-end niche products with high margins. One-off quarters should not deter your long-term investment view. And if the stock was down close to about 8.5%, and if there is further negativity this morning, we maintain our positive stance, and our target, Neeraj, on Natco Pharma stands at about 1,080 to 1,120. And these are only purely long-term. And I'm quite sure that the management is capable of resolving all issues with respect to the product, with respect to the, little bit of scale down on the businesses as far as US European markets are concerned. And I don't think that's going to be a huge dampener as far as the performance of the company is concerned quarter on quarter. Maybe it might just drag for 1 or 2 quarters, but we remain quite optimistic and positive on it.
Okay. One quick question on a large cap name as well. And within the top 4 IT names, if you are bullish on large cap IT, Gaurang, if you are, give us one out of the top 4 or top 5 that you believe is a better bet amongst the rest. Because, I mean, we know that there's some bit of tailwind for the pocket at large, but if you had to choose one amongst those, and why?
So let me say this, Neeraj, that, when IT and pharma, Indian IT and pharma sectors were untouchables, let me use that word, nobody wanted to even go closer to these names. And there were distressed valuations. And I'm talking about 1.5 to 2 years back, or maybe a little beyond that as well. We as a brokerage house remained positive on Indian IT and pharma, and we still remain positive despite the fact that names like TCS has rallied almost 50% from the lows of 2100 to 3100 plus. Infosys also has rallied, so has HCL Tech, so has Persistent, Mindtree. But if I have to pin down on one name, and that to a large cap, then I would believe HCL Tech would be the name that I would choose. I'm equally optimistic about Infosys as well, post the entire, management going and coming back, and Mr. Neil Khani coming back and, controlling the reins of the company. But HCL Tech would be something that I would be, definitely looking at. And remember one thing, Neeraj, HCL Tech was one company, despite, some slowdown in numbers from companies like TCS and Infosys, their run rate continued and even bettered quarter on quarter. And if I have to pick one name from the mid-cap IT, then that would be Cyient Limited.
Okay, we'll talk about the rationale behind Cyient in just moments from now. But it's that time of the show when we get in our research team members on our research huddle to talk about all the key stocks that could be reacting in the session today, or stocks that you should be watching out for in the session today, because they'll come out with numbers. It's a busy day for pharma, 3 odd names coming out. Auto components could be in focus because of Bharat Forge as well, and cement will remain in focus. A tough day of trade yesterday, but ACC numbers coming out today. But while we talk about all of those numbers, let's first start off with the numbers that have come out already. And Jadhav, which of these stand out?
Yeah, so I've picked 6, which I think will probably react most. Of course, I have to start off with Excel Industries. Our revenues are up 60%. Net profit has jumped from 1 crore to 19 crores. EBITDA has grown more than 5-fold. And margins have also risen from 6% to 22%. All of that on the back of lower raw material and employee expenses. So basically, it's the OPEX factor which is working for the company. Monte Carlo revenues are up 24%. Net profit is up 37%. EBITDA is up 50%. And margins have also expanded by about 400 400 basis points. Torrent Power, again, revenues up 20%. Net profit has more than doubled. EBITDA is up 45%. Margin, again, have risen by 500 basis points. You have ICRA, where revenues are up 10%. Net profit up 62%. EBITDA has almost doubled to 34 crores, and there's a strong margin expansion as well. On the weaker side, you have Ramco Systems. On a quarterly basis or Q-on-Q basis, revenues have grown by 9%, but net profit is down 38%. EBIT has halved to 6 crores, and margins have also contracted by more than 500 basis points. Quick Heal Technologies, again, revenues down by about 40%, net profit down by about 80%. EBITDA has been hit sharply, and so have the margins, which are down from about 51% to just about 11%. So, Neeraj, those are some of the stocks which could react quite a bit today.
Well, Excel really stood out, but yeah, a couple of others too could be interesting ones. Now let's talk about the result previews and start off with what? 3 pharma names. So let's start off with that first.
Yeah, so Cadila is the biggest one that will come out. So it'll be a strong quarter for Cadila, given the fact that they have an exclusive drug that they launched in this quarter. So we are seeing a top line growth of 33%, we are seeing bottom line grow by 90%, and EBITDA margins at 26.5% versus 17%. The main growth will come in from the US markets, anywhere between 70 to 80% growth, because of the Lialda drug that they launched in the quarter that they didn't have. So 65 to 70 million dollars will come in, and incremental revenues that will come in because of the Tamiflu season will aid numbers for Cadila. So Cadila will be on the strong side. On the weak side, we have Glenmark, because the revenues are seen down 14%, profit is seen down almost 50%, and margins are seen at 19% versus 30% last time around. And the case is reversed because they had a high base last time around because of the Zetia drug launch that they did. So 30 to 40% US sales drop is something that we are anticipating this time around. There is significant amount of pricing pressure and competition. There is sales decline in some of their key drugs that will dent them. India business, we are seeing growth of anywhere between 10 to 12%. And finally, Torrent, it will be a stable set of quarters. We are seeing revenues up 7%, profit down 4%, and EBITDA up 14%, which means margins of close to 23% versus 22%. 5 to 7% decline in the US markets given the pricing pressure that is there. But India revenues will be very strong, 12 to 15%. Only 15 days of Unichem numbers will be consolidated, so the majority of the impact will come in on the fourth quarter. But PAT will be lower this time around, given the fact that tax rate was extremely low last year. On that base, profit is expected to be on the lower side this time.
Okay, watch out for that. Watch out for ACC as well, Nikki. What's expected here?
So we're looking at steady set of numbers coming in from the company. Our top line growth is expected to grow 22% in this quarter on year basis at a number of around 3,200 odd crore. EBITDA is expected, it's seen up as much as 39% higher at a number of 352 odd crore. Margins are expected to expand to 11% as compared to 9.5% in the corresponding quarter, and PAT profitability is also seen 89% higher. The key number that we need to keep an eye out will be volume growth figure, which is expected to show a good 14% year-on-year jump at a number of 6.2 million ton as compared to 5.4 seen in the corresponding quarter. Also, realization is expected to improve 7% year-on-year basis at a number of 5,239 per bag. Now, realization, however, on sequential basis is expected to be muted due to higher costs that we could see in. However, volumes might just see a sharp jump due to the favorable base impact, along with the expanded capacities that we've seen both in Jamul and Sindri plant. Margins as expected are expected to grow on back of good realizations. Key things that we'll keep an eye out will be pricing in the eastern region, the cost pressures, demand outlook, and the volume growth.
Okay, we'll watch out for that. And Yatin, Bharat Forge, what's expected and what's that one thing that you would watch out for from the numbers?
If you look at Bharat Forge, of course we know that the trajectory of the Class 8 truck orders have been upwards. The domestic commercial vehicle market and the passenger vehicle market is doing well. So looking at all these factors, we are expecting Bharat Forge revenues to grow at 44%, profit growth seen at a strong 63%, profit seen at close to 210 crores. Margins also would see a modest expansion to a level of close to 28%. Of course, the key figure to watch out for will be the operating performance that I mentioned. The margins are seen at 28%, and not only that, the shipment tonnage growth is seen at close to 28% on a year-on-year basis, and probably that will be the most important factor to watch out for. Apart from that, the management commentary on the oil and gas segment as to how they look at it, because we have seen some pickup there as well, and the outlook on the US and European market is something important that we'll be watching out for apart from the earnings.
Okay, thanks all of you for joining in. Gaurang, do you track Excel Industries?
I'm afraid not, Neeraj. We don't have any coverage on
Fair call. Any thoughts on any one of these numbers that is coming out? Okay, let's talk about Bharat Forge. Any thoughts here?
So I remember the time when these Class 8 truck orders were down 38%, 40%. And that was when the slowdown happened, Neeraj. And let's face it, there is a robust domestic market, minus US. There are other geographies that, Bharat Forge caters to. And now a turnaround and the uptick of 38% on Class 8 truck orders from the US. Along with that, defense for as far as the artillery, opportunity is concerned, which was opened up by the government when they did their move on the defense FDI. Target of about 1,080 on Bharat Forge long term, quite optimistic, and we're quite sure that all these, innovations and changes that the government is putting in place with respect to clean green energy, alternative fuels, etc., would definitely have a positive impact on the numbers for Bharat Forge.
Okay. Thanks, Gaurang. Stay on, so much more to talk about. We'll also have to talk about Gaurang's view on Cyient. That should be interesting. But first, a dive into what the charts are showing for the day. Our technical expert, Samit Chavan, Chief Analyst for Technical and Derivative Research at Angel Broking, joins in, as does Kiran Jadhav, Chairman and Managing Director at Kiran Jadhav and Associates. Gentlemen, both of you, good morning. Thanks so much for joining in. Samit, based on the positions, based on your chart reading, and the fact that SGX Nifty is indicating a mild upside today, what would be your approach towards trading the indices, either the Nifty or the Nifty Bank?
Good morning, Neeraj. We have been slightly cautious since last couple of weeks, and the short-term trend has changed now below 11,000. So 11,000 was a crucial support level, and below this, we've already seen a confirmation of bearish engulfing pattern on weekly chart. So in last 3-4 days, we've already seen impact of this negative pattern. Clearly, trend is on the downside. Yes, you are likely to see higher volatility in the market, but any bounce back is likely to get sold into, at least in the near term. So for a day or for next couple of days, we are seeing important levels on the higher side, 10,550 to 10,620. In case of surpassing 10,620 also, we could see extended bounce back, but we don't expect now Nifty to move beyond 10,800, 10,850. So our stance would be to sell on any rise. So probably today, if we see a decent bounce back around say 10,540, 10,550, that would be an opportunity to go short. 10,620 would act as a very strong resistance, so we can keep it as a stop loss, and we would expect a slide toward 10,400, 10,350 in next probably couple of days.
Kiran, good morning. What is your approach to trade any of the key indices?
Yeah, basically looking at the Nifty, we believe that the derivative data suggests that 10,600, 10,700 would be a great kind of resistance. I don't see the markets move beyond these levels. A strong open interest additions call writing seen at around the 10,700 mark, with an addition of around say 7.7 lakhs in the call options writing seen, and which basically tells us that the bearish momentum is still there to continue. With the heavy volatility that we have seen, we believe that in the next couple of days, we could go into a sideways momentum before we see a next leg of the downfall. And on the lower side, 10,200, 10,000 are the levels where we should get a good kind of support. So there is more pain left in the markets. I would be a seller at all highs for the Nifty between 10,600, 10,700. For a target of say 10,200 to begin with, and then we could review to a level of 10,000 in the days to come.
Okay, so let's try and nail it down to specific trading ideas from both our experts. Samit, to you first. If I had to ask you for two strategies, which one would those be? The reason why I'm not surprised with Vedanta is because commodities have come off, but MCX is an interesting choice, Samit.
Yes, I'm inclined towards giving sell calls. Yes, Vedanta is the one stock that we are liking since last couple of days to go short. Yesterday we saw a decent corrective move in this particular stock from the resistance of 330. So we expect this weakness to extend Target would be around 298, stop loss around 323. MCX, the one stock, this has been one of the underperforming stocks since last 5 to 6 months, and we have already seen massive correction in this stock. But the way the stock gave a decent bounce back yesterday, and in last 1 hour we saw massive buying interest in this particular counter. If I have to talk from a technical perspective, then on the daily chart it has already confirmed its Morningstar pattern. So that clearly indicates at least you're likely to see some kind of relief rally in this particular counter. So we would expect a good trading bounce in this counter. So one can go long in MCX, keep a stop loss somewhere around 700, and at least in the near term you could expect the stock heading towards 785 or 795 also.
Well, some bit of pickup in MCX, which is stretched otherwise in the last 6, 9, 12 odd months been a dud of a stock, to be honest. Some bit of trading pickup there. Kiran, what are your 2 stock ideas for the day?
Yeah, the first one, I'll go with the short with UBL. Clear on the charts, it clearly says that the longs have been trapped. On the higher side, there was good kind of activity seen at around the 1160, 1200 kind of mark. And yesterday we moved well below it and closed completely engulfing the last 2 days. Along with that, the open interest additions have been significant, 8% open interest additions with decent kind of volume. So we believe that this stock, with a positional view of say 1 to 2 days, we will have a target of around 1020, and for this trade we'll have a stop loss of at around the 1140 kind of mark. So this is one short call. Another one would be Hexa. A lot of analysts were pretty aggressive on this counter, but however, yesterday we saw great kind of sell-off, and this sell-off would lead to the next leg of the rally, which would take the stock to around another 10-15 rupees lower from current level. So we have a target of 345, 340 on this stock with a stop loss of say 365. And one long, which would be a defensive one, would be a Castrol. And we believe that Castrol should do good in the days to come. So with the kind of results that it gave and kind of the chart patterns that it has been showing, it has done a double bottom pattern at around the 172 with huge kind of volume. So I believe that the intermediate uptrend is there to stay, and this stock should rally to a level of say 196, 200 levels in a couple of days. My stop loss for this trade is pretty near from current levels. We have a stop loss at around the 183 mark. So 4 rupee risk with a 10 to 15 rupees rewards on this counter.
Okay. Thanks for those ideas. Gentlemen, stay on. Much more to talk about. But that time of the show wherein we get in our special segment Bloomberg Edge, wherein Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. And Jayesh, what is it? An outside-inside pattern formation. What is this pattern about?
That's right, Neeraj. The stock that I'm watching out for is Asian Paints, and there is an outside-inside pattern formation on the Bollinger Band indicator that I am referring to. First, let's have a look at how the outside-inside pattern actually works and what are Bollinger Bands. Bollinger Bands are, very popular especially when it comes to volatile markets, and that's what we have been experiencing in the recent few days. Bollinger Bands, they show you expected trading range based on volatility. There are 3 lines which get plotted. There is a moving average, there is an upper band and a lower band that gets plotted on the chart. The interpretation, Bollinger Bands, when they expand, it shows that the market is trending, and when the bands contract, it shows a sideways market. Now the outside-inside formation that I was referring to, so you have to look at the 2 most recent candles, wherein the first candle has to close outside the band, so either the upper band or the lower band, and the immediate next candle, which is the second candle, that has to close within the band. So, essentially it comes back within range. That is what we are referring to. And if you go to the chart of Asian Paints, you can see that so that's the band that you see. The blue line is the upper band, white line is the moving average, and the yellow line is the lower band. This is the last 3-month chart of Asian Paints, and we see the 2 most recent candles. So you see this red candle that has actually closed outside or below of the yellow line, and the immediate next green candle that has actually closed above it, which makes it an outside-inside formation, and thereby is signaling a buy signal.
Interesting. And if I see that chart, Jayesh, just a few months ago, there was a similar formation, if I'm not wrong. and then the stock has rallied.
Yes, Neeraj. So last 3 months, it has happened about 2 or 3 times, and every time that this pattern has been hit, there is upside that we look at. And the last 1 year, if you had traded all of the buy indications, net profit would be 19%.
19%. Wow. Okay. Thanks a lot for that, Jayesh. So that's the technical setup for our viewers. Gaurang, fundamentally, Asian Paints or a Berger or a Kansai Nerolac, it's been a ho-hum quarter of sorts.
Well, so let me give a disclosure. Asian Paints, Kansai, Nerolac, Berger Paints, Ascon Noble, if you will, all feature in our buy recommendation, and the top pick is Asian Paints. And Neeraj, look what happened to crude oil last night. And this is what we discussed even last week with you and Pradeep. We expect the crude oil to pull off sub 60, closer to 55. And that's good news for for paint manufacturing companies, because their large part of input cost is crude oil. Now, extremely positive on the 2 products of these paint companies, especially Asian Paint, that is automotive as well as decorative paints. And these are also, high-end niche margin products. So 1220, 1265 cannot be ruled out. And remember one thing, government is spending huge for infrastructure. They have made it absolutely clear, and the Honorable Finance Minister in the budget also mentioned about affordable housing, housing for all. And all this will need paint, let's face it. So that's a huge new order market, and equally robust is the replacement market. And the best part is that with Asian Paints, the product recall or consumer loyalty, whatever you want to call it, is extremely high, and hence we remain extremely positive on Asian Paint, Berger Paints, Kansai Nerolac, Ascon Noble.
Okay. And by the way, I just want to qualify one thing before I ask Gaurang the next piece, and that is on IT. Cognizant we spoke about, and the reason I bring that up is because Gaurang has Cyient as an IT idea. But just keep one thing in mind. While Cognizant has given out its guidance, this guidance does not include the benefits from US tax benefit spend that clients might do, because it's a straight add-on to the bottom line, and clients will therefore probably have that much more money to spend on technology, on customers, etc., etc. But I think Cognizant also indicated green shoots in terms of spending by US banking clients. And remember, US BFSI is a chunky piece for a lot of listed Indian IT vendors any which ways. So it could be a very interesting thing for IT companies over the course of the next 12 months. If Cognizant is seeing this, the others will probably also see it. So keep that at the back of your mind while you're viewing Cognizant numbers and trying to think about what to do with IT. A large piece could be making a bit of a comeback. Having said that, Gaurang, you have a positive view on Cyient. Why do you like Cyient?
So I think this is one of the mid-cap IT companies along with NIT Technologies, Dheeraj, which did phenomenally well compared to the bad days or bad times for Indian IT sector, when even your frontline names disappointed to a great extent. Consistency in earnings, product, platforms, services intact, and capability to scale up in terms of new platforms and new services. My sense is, and this one stock, Neeraj, which was quite strong in terms of consolidation zone. Even if you look at the technical parameters, of course, I don't look at it. I look at purely fundamental. And my belief is that despite the outperformance on earnings compared to large cap names, this run rate will better over the next couple of quarters, including, with Cyient Limited, I would also like to add NIT Technologies. And if you look at the performance in NIT Tech over the last 2-3 months, you can very well, see from the levels that the stock has reached from the lows. I think this outperformance will continue. So Cyient and NIT Technologies, if you ask me in terms of percentage return over, say, a year and a half to, I would not rule out 20-25% plus kind of a run rate. And let's understand one thing, Neeraj. The theme that we believed almost for Indian IT companies, and our confidence has only got reinforced, is the fact that there is a huge turnaround in terms of the environment and the backdrop against which the Indian IT companies were working some time back and now.
Okay, that's a pertinent point as well. But stay on, Jaman. So much more to talk about. 40 seconds to go for the pre-open rates to kickstart. I dare say Nifty IT could be for an interesting day of trade. Sameet, actually a quick 10-second answer. Any IT stock on your radar today?
No, honestly, we are avoiding at current level. They have slipped into a corrective mode, so we would rather wait for dips to happen.
Okay, fair call. Stay on, Jaman. 16 seconds to go. Asia is showing a mixed picture. Must tell you, the SGX Nifty's come off from the levels that it was trading at as well. Was up about 0.5%, now about 1/3%. So let's see. We'll probably start off in the green. The question mark only is will we stay in the green? Let's wait and watch. The first ticks, well, all over the place. The Sensex in the red, the Nifty about 1% higher. I'll be surprised, positively surprised if it happens, but likely from the SGX Nifty rates that it will start off with just a mild bit of an uptick. I think the Sensex too will pull up its rates in a bit. Let's bring up some individual names. Cipla should be one. We should try and pull Cipla up on the screen. Infosys is showing an unnatural uptick, 4.5%. I think that will correct itself. Gale is showing a 4.5% uptick. It will correct itself too. And Sun Pharma should be showing a downtick. That may not correct itself. It could well start off anywhere between 2% to 3% to 5% lower. For now, again, very volatile, but let's wait and watch. The Taro miss should weigh in on Sun Pharma in the session today. Interested in seeing what's happening to Shankara Building Products. As I said, the name Amansa tends to evoke reactions. After an uptick yesterday, a mild start in the green. Let's wait and watch if that corrects itself. And stocks which are showing an uptick, Prestige Estates, it was a strong quarter, so about 6.5% higher. Actually, the whole realty space, Soma and a couple of others too, seem to be doing okay. Let's give these rates a chance to settle down and we'll talk more about them. I just want to bring up the rupee as well very quickly, because the dollar strength has resulted in commodities coming off across. And has it resulted in the rupee showing a deep gash? No, not quite. Just about 6 odd paise in the red, so no, not too much. Okay, let's talk about what key brokerages are saying in the session today. Just before we talk about what else will happen, remember Macquarie I think has come out with a note on Hexaware, I think, if I'm not wrong, and they have given an uptick there, so do watch out for Hexaware. There are some reports that have come out on Cipla, and positive, I might add, even if the target price wouldn't have been raised too much, there is some bit of bullishness on Cipla, and this is a good respite compared to what we've seen with Lupin, what we've seen with Sun Pharma courtesy Taro today. That is actually music to the ears. Okay, so markets, we'll give these rates a chance to settle. But while markets are seeing some correction, public offers and listings continue on the Dalal Street. The latest kid on the block is Galaxy, raised about 937 crores at 1480 rupees per share in its IPO. Will list on the bourses today. Samit is standing by with the possible listing and the valuation scenario within different listing parameters. Samit, good morning.
Good morning, Neeraj. Now, if you see, the Galaxy surfactants had seen a decent subscription numbers. It was subscribed total 20 times, with most of the demand coming in from the QIB portion, which was subscribed 54 times, followed by the HNI portion, which has seen a subscription of close to 7 times, while retail, which was subscribed close to 6 times. Now, the street is expecting a premium of close to 70 rupees per share on this for this IPO. There is a listing gain of close to 5%. So let's see how the valuations and the market capitalization on listing would stand. The issue price of 1480, the market capitalization of the company was close to 5,200 crore rupees. Now, if the company lists at 1,550, the market capitalization of the company would be close to 5,500 crore rupees, and if it lists at 1,600 rupees, the market capitalization would be close to 5,700 crore rupees. Now, let's see how the valuations would stack up. At 1,550, the price to earnings, the FY18 price to earnings would be close to 36.6 times, market cap to sales would be 2.3 times, EV to EBITDA would be 21 times, while price to book would be 8.7 times. And at 1,600, the price to earnings would be 37.7 times, market cap to sales 2.9 22.4 times, EV to EBITDA 21.5 times, and price to book 8.9 times. So if we see, Galaxy Surfactants is a leading manufacturer of surfactants which is used as a raw material in products such as which is used as personal hygiene and sanitation. It is also a leading manufacturer of special ingredients which is used as a raw material in products like sunscreen, fairness cream, etc. Now the company generates most of its revenue by selling surfactants. It gets around 67% of its revenue from that, while it gets 33% from specialty. But going forward, the company is going to focus more on specialty products because they provide higher margin to the company. The company sells its products in 70 countries and it gets around 65% of its top line from overseas market. It gets 45% from Africa, Middle East and Turkey, while it gets only 35% from India and the remaining 20% from rest of the world. Now, the company has major clients like P&G, Kevin K, Dabur, Henkel, Jyoti, Unilever, and if you see from the top 10 clients, it shares a relationship of more than 5 years and they contribute around 59% to the top line of the company for the first half of financial year 2018. Now the company has around 7 manufacturing facilities, of which 5 are in India and 2 are in the overseas market, and the average utilization of these 7 manufacturing facilities for the first half of financial year 2018 stood at 62.5%. Now the company has no listed pure player because there are very few manufacturers of surfactants, and on the listed side, if you see, these players are in the surfactant market, but the surfactants contribute a very small portion to the top line. So the players that are currently in the surfactant market are Godrej Industries, India Glycols and Aarti Industries. Now, moving on to Galaxy Surfactants financials, the company's revenue, net profit and EBITDA grew at a compounded annual growth rate of 8.4%, 24.4% and 7.5% over FY14 to FY17. Now, the reason behind a double-digit growth in net profit is that the company has been able to reduce its debt and interest cost over a period of time. Now, if you see the company's return ratios, they were also healthy. The return on equity stood at 24%, return on capital employed at 30% and return on asset at 11.4%.
Okay, thanks a lot for that. Sameet, thanks for putting that into perspective. Gaurang, have you studied this IPO, Galaxy?
We have definitely, Neeraj, and as a disclosure, we came out with an IPO note, and from a long-term point of view, we have advised us subscribe to the IPO. I can't comment on listing gains or short, medium-term outlook, but as your colleague was just alluding to, the only overhang, if you ask me, is the dependency of the business as far as the export market is concerned, and the kind of revenues that they get from the domestic market. But the client list and the areas where it operates all are niche, and I expect a decent growth over a long term.
By the way, Sun Pharma has started off lower, so that's a couple of percentage points off. Just wondering if there is a trade here on Sun Pharma. We're 8 minutes about to get over, so we'll probably start off about 11 odd points lower. Kiran, Jadhav, would you take a short trade on Sun Pharma after it opens a couple of percentage points lower?
Yes, of course. For the last 4 days, the stock has been trading in a range and with a negative bias, of course, and a strong support exists at around the 540, 545 mark. So till the time this support is held on, I might not take a short call. But if the price opens or starts trading below the 540 mark, I'll definitely take a short call. And my positional target will be somewhere around the 510 mark. So a good kind of slide could be expected from current levels. And once the stock moves above below the 540 mark, my stop loss will be only 7 rupees away. 547 would be my stop loss. So good risk to reward ratio for a short call for that matter.
Sameet, I don't know if the derivative positions indicated anything to this effect, but what would you be doing in a Sun Pharma?
No, it has been, overall position has been light since last few days. But overall, if you see, yes, today the stock has likely to slip further. But if we look at it from a slightly broader perspective, the technical structure remains bullish as long as it manages to hold its important support level of 500. So any downside probably of a move towards 520, 510 according to us would be a good buying opportunity, and that makes a low risk buy by keeping a strict stop loss below 500. So there's a possibility that the stock might hold this important support level, and from there we might see some kind of recovery. But with a slightly broader perspective, we believe that it's a good buy on lower levels.
Okay, so just to put this into perspective, Kiran Jadhav is actually batting for a level of 510. There's not too much of a dichotomy here. Sameet is saying that from a slightly medium-term perspective, maybe 500 is a support and you may want to keep that as a stop. So depending on the nature of the trader that you are, you can take the position accordingly on Sun Pharma. It will start off about a couple of percentage points lower. What will start off lower is Vakrangi. As the 8 minutes have settled, Vakrangi is likely to start off another 5% lower. Indian Oil, very interestingly, will start off about 4 percentage points lower. So that's one stock to monitor from amongst the large cap space. And yesterday's big gainer, Chambal Fertilizers, will start off about 2 percentage points off. Sameet, any thoughts on IOC?
See, recently we've been quite upbeat on other OMC's names like BPCL, HPCL. They've already seen, HPCL has already seen a massive recovery in last couple of days. As far as IOC is concerned, it has slipped into a consolidation mode since last 2 to 3 months now, wherein on the lower side 360, 370 has become a very strong base. And with a near-term view, 380, 375 would be seen as important support level. So today, if we see this particular stock, moving beyond 390, that could trigger some momentum, buying momentum in this particular counter. In this case, we would see this stock heading towards 405, 408. And with a slightly, broader perspective, if the stock manages to surpass 410 convincingly, then we could see higher levels of say 430, 440.
Okay. Let's tell you all you need to know to stay ahead in trade today. We are minutes away from the markets kicking off trade, and let's tell you all that you need to know. ABB, ACC, BHEL, Bharat Forge, Cadilla, Glenmark and Page Industries are amongst the stocks that will come out with the results today. Sun Pharma's Israeli subsidiary Taro reports a weak set of numbers for the third quarter. Strong quarter for Reliance Home, Alpha Geo, First Source, SRF, Excel Industries and Monte Carlo. IGL, Gati, Ramco Systems, Quick Heal and Navneet Education report a weak set of numbers. Mixed cues from Aurobindo Pharma, Hexaware, Dixon Technologies as well as IRB Infra. And in bulk deals, Amansa Holding buys 1.7% stake in Shankara Building Products. The stock could be active today. Okay, one set of numbers that we haven't spoken about. Gaurang, before we thank you, Prestige Estates. Any thoughts here? Thought the numbers were fairly okay.
So in the real estate pack, we positive on Shobha, Prestige, Godrej Properties, Mahindra Life, and if I'm not mistaken, Oberoi Realty. And Neeraj, these are going to be the beneficiaries of the entire Real Estate Regulation Act (RERA) that has been implemented. And my belief is that all these companies have a very strong balance sheet, virtually zero or no debt, and their project completion run rate is much better than the industry standard, and so is their realization per square feet. Stay invested, and if you don't have, I think you should use bad days as an opportunity to get into it. Mind you, stocks belong to real estate sector, and that's by default a high beta. So there could be a heightened volatility, but they are great investment items.
Okay, Gaurang, we'll leave it at that. Thanks so much for taking the time out and joining in and giving us your perspective. Just 2 minutes to go before trade kickstarts. We'll take in the top trades from our experts, but I'm told, do we have Samir Arora with us already? Okay, we'll have Samir Arora in just moments from now, and looking forward to that conversation as well. As we just count down to the market open, let me take in the top trading idea from both our technical experts first. Kiran Jadhav, if you had to bet on one stock for the day, which one would that be?
It would be UBL. Basically, as I said earlier, there's a long trap that has happened and a long covering would be seen in this counter. A target of positional view for a couple of days should give us a target of around 1020 mark, and stop loss for now would be 1140. The second stock would be again a short call on OFSS. Good kind of sell-off that we saw yesterday with strong kind of volumes. Delivery-based selling has been seen. At the same time, even the derivative data is quite weak. 10% open interest on the lower side can be seen over here. My target this counter would be around the 4,000 mark, and my stop loss would be around the 4,130 mark.
Okay. Sameet, your top call for the day today.
In such kind of scenarios, generally I would have gone with some short bet, but the way MCX closed yesterday, I'm impelled to give this as my top pick. So MCX remains my top pick for the day. Stop loss 700, target would be 785.
Sameet Chauhan as well as Kiran, Jadhav, gentlemen, many thanks for joining in today and giving us your perspective. Just 30 seconds left, so we'll kickstart, we'll do the market open and then go on and bring in Samir Arora for his thoughts on all that's happening around the world, quite frankly, not just out here. But 25 seconds to go. Remember, the start is likely to be mildly in the green. The Nifty pre-open rates have suggested that we'll have about a 40-point uptick. Whether it lasts or no remains to be seen. Expect some weakness in Sun Pharma because of the Taro numbers. A clutch of mid-caps have come out with some very interesting set of numbers too. 2 or 3 winners there. And IT, I thought, could well be an interesting pocket to watch out for, courtesy Cognizant guidance and the green shoots that they spoke about on the USD FSI. This is what the markets are doing on open today. 0.5% for the Sensex, about 29 odd points for the Nifty, and the Nifty Bank, well, flat as flat can be. Remember, it cracked yesterday post the policy. Some policy positions would have been unwound, but it's starting off on a very flat note. In fact, the Sensex 2 has cooled off completely, so no surprise there. Almost, it's a flat start. What about the broader end of the spectrum? The mid caps and the small caps, about 1/3% apiece. So no big moves there, but yeah, green all over the screen. The Nifty 50 heat map should come up on your screen too, and yeah, a fair bit of green. Save for Sun Pharma and IOC, do not see too many disappointments, though commodities by and large seem to have come off to commodity stocks, I mean. So Vedanta, Hindalco, even cement companies are facing some selling. Tata Steel is marginally in the red. But on the green side, Cipla, brokerages give a bit of a thumbs up. And from all the large cap pharma disappointments they are seeing off late, Cipla did stand out as a positive one. And OMCs are active, so IOC may be down, but HPCL, BPCL, couple of percentage points higher for each of these. Very quickly, some mid caps and small caps that you should monitor before we get in Sameet on the conversation. Though I want to start off with Sun Pharma and the intraday trade there, because remember the Taro number is very weak, and Sun Pharma starting off 2.5 or 3% lower, so not a good start for Sun Pharma on expected lines. Some other numbers that came out, I thought Excel Industries stood out because of the operational beat and the resultant bottom line numbers, 7% higher. Prestige Estates, good numbers, 3% higher. And Reliance Home Finance, I think the reported PAT has doubled. That stock is up about 3.5% in trade. Shankara Building Products, because of the bulk deal that has happened, 2% higher. And the downtrend, I believe continues in Vakrangi, so down another 5% in trade. May not surprise a lot of people, but another 5% down for Vakrangi in the session today. But the market's lying absolutely flat. 2 big events out of the way, the union budget and a credit policy out of the way as well. Let's bring in Samir Arora with his thoughts on both of those and more. Samir, thanks so much for taking the time out and joining us yet again on Bloomberg Quint. You know, because the policy is immediate, I just want to start off with that. We almost got a feeling that the RBI was showing or giving enough signs to say that they are not going to go down the path of trying to save an asset class which may be bonds. The comment on dividend also seemed to indicate that they are done with the year. There was almost this sense of independent an RBI institution is being given out yesterday. How do you think that augurs for policy making, and what does that do to the rate trajectory and therefore investing in the course of the calendar? Samir, can you hear me? No, I don't think Samir Arora can hear me. Okay, we'll just try and repatch that line as well with Samir Arora, but it'll be interesting to get his comments on the policy statements, on the budget, and all that's happening in the emerging market pack as well. Remember, he was fairly hopeful or pretty outspoken against the introduction of LTCG, so that'll be a conversation, though he's spoken at length about it. But interesting to get his perspective 7 days now post the event as well. Want to bring up some other stocks too. While we've gotten the Nifty 50 heat map, I think the Nifty 500 names could be interesting to monitor as well. And let's speak about the gainers and the losers on the Nifty 500 too, the broader end of the spectrum. Vakrangi is the one which is losing out, but look at the Nifty 500 gainers and Cipla standing right up there. Some other names like Religare and Videocon, I'm ignoring those. L&T Tech continues to gain about 4% higher as well. Okay, let's try and see if Samir can hear me now. Samir, can you hear me?
Yes, I can.
Samir, good morning. Neeraj here. Thank you so much for taking the time out. Did the RBI policy yesterday, and I don't know if you watched it at length, but the statements given out by the governor in the policy, Viral Acharya saying that we are not going to be batting for an asset class, and I thought he was referring to bonds in a veiled way, and the sense of independence that the RBI was trying to show yesterday, did it stand out for you?
Actually, I did not see the whole press conference or whatever they had later, but this comment was definitely very interesting that, you know, investments may be hurt a little bit or relatively impacted because we have 5 taxes on equity markets or on equities or on investments. Yeah, it was good. Very nice.
Yeah, well, I think his comment was pretty much on the lines of the comments that I heard you give out pre-policy as well. I think the governor himself said that with so much of taxation on capital assets, investment might take a bit of a hit. Now, I know all through the pre-budget sessions, Sameet, we were talking about the taxation on markets from a equity investor's perspective. I think the RBI probably threw open the gamut to investment by and large too. I know that you would be disappointed with the introduction of LTCG 7 days or 8 days later. Any further perspectives? Because I think everybody's heard you enough on why you thought it was not a great idea. But anything else that you want to add here?
The thing is that I don't think so deeply. For me, it's very easy to understand what is getting affected. The RBI governor to say that it affects all investments. I was only talking from a narrow perspective of stock market investment. And so maybe I can sense these things faster than I can articulate it. So that is why I was very happy. But there's nothing new to say other than to say that we are trying to escape by saying that this is a global issue. So when the global issue settles, we may still have this because it is a relatively a very big difference from what happens in other markets and what happened a few days ago in India. Relative to that baseline or relative to other markets is not something that will get absorbed just because the world is falling. It's a relative hit, which will reflect someday, upturn or a downturn. But you can't just take away 10% and say it doesn't matter. It matters.
Actually, that's interesting. I was about to ask you, you preempted my question. The last 4 or 5 days, you could attribute that the outflows that have happened from India as well are almost in line with what's happening with the rest of the emerging market pack too. There was this whole report that was out on Bloomberg and Reuters yesterday. But you do believe that even if this does settle down, India will probably continue to face relative outflow pressures because of this tax?
No, the thing is that over time, obviously these things will be absorbed. But I'm just saying position A versus position B. Position A is that India is now charging 10% more tax than other countries. So for a foreign investor, it has become 10% less interesting than whatever it was before. Now, it is possible that for some time that does not matter because there is this money and that money and because they think in absolute it's going up anyway. But it can't be, if anybody has choices of 10 countries or 15 countries, that a 10% reduction in expected returns makes no difference. That would only make no difference if you were so far ahead of others. Then even if you take away 10%, it does not matter. My simple suggestion is that there were many fund managers, domestic fund managers who came on TV and said it does not matter if you take 10% because if you make money, you can pay. First thing, those guys are not paying, their investors are paying, right? So for them to say it does not matter, I think the government should charge all these guys 10% extra tax because they are publicly admitting that it doesn't matter to them. So whoever comes and supports, he should be separately charged 10% more unless he's directly the investor. Some of these guys are AMC managers. Their investors will pay, they will not pay. So they should also pay 10% extra if they think it doesn't matter. Of course it matters. It only matters when it comes to you. It doesn't matter when somebody else is being charged. That's why they come and say STT should not happen. Because STT, they use prop and they do, broking or whatever. But for an investor, they say we don't care. They don't say we don't care. They say it doesn't matter.
Yeah. Well, Sameet, Sameet, I know you both talking of this issue, but I have one last question here, and that is more from a perspective of the next 12 months or 24 months or 36 months. this thought process, and the reason I bring this up is because next day that one pick that got articulated was this TOI image wherein Hasmukh Adhia was saying that capital gains don't accrue from any effort. But I think the more interesting comment also came in when he spoke to us, and he was speaking to Menka, and he mentioned that, I mean, when asked about is the rolling back of STT on the table, and the comment that he made was interesting to my mind. He said STT will go only when capital gains tax double from the current levels. Does this discourse kind of disturb you a bit?
In general, yes, but I don't want to be the lone man fighting. But how do I care? Even for me, my investor is paying, and some of them will, pair it, and some of them will redeem it when a big picture says, "Who am I?" But every line of that interview was wrong. So what am I? Every word was wrong. Not just one line. For example, there was another line which says that if we cut taxes, shareholders benefit.
Okay, fair call. Okay, I'll leave that. Samir. I think we've spoken enough at that. Let's talk about what are you sensing across the world, because the belief is that the growth green shoots are here. IT companies, other companies are talking about how the spending from the large banking financial institutions in the US will pick up. We've heard enough commentary from regional fund managers about how the regional EM markets are also showing those shoots. Do you think 2018 continues to be a tide that will carry all boats, but maybe at a different pace than what 2017 was?
Much lower pace.
Okay.
Last year the market and everybody went up between 40 and 60%. Depending on mid-cap, large-cap index, and therefore plus minus that for fund managers. This year, if we can make 15%, we're pretty good.
Okay, and that would be a par for the course for almost all sets of investors, right? We're trying via various forums to tell people to reset their return expectations as to not to be disappointed. Amidst all that's happening within the commodity world, Bitcoins have come off as well, but you would believe that 10-15% is par for the course for almost all asset managers across.
10%, 15% would be a good return if we can make that, if the markets allow us to make that. Generally, the thing is that obviously it become more elevated than last year. And second is this uncertainty that has happened as to how to make continuous trade-offs in the US, because India has no standing to say that we will decide what our return is. We shall follow the United States till we get that leadership when many things change in India. But today we are all followers of a global trend, and we can outperform it a little bit or underperform it a little bit. We can't even have the independence to fall if the world goes up, because even that we will not do. If the world goes up, we will go up independent of what happens here. But in a general sense, let's do the US first. That there is for the first time in the last few years a significant trade-off that are we looking at growth part or are we looking at the discounting part because of interest rates and all that, and that will settle. But because they also have had massive rallies and they also can't go up more than 10-15%, which for them is anyway a good return. If that, because if you look at long term, they don't have that kind of return per annum. And so India will be plus minus a little bit, and then we'll worry about elections and we'll worry about general uncertainty and emerging market inflows and outflows. So I don't think we are going up 25% as a market. We will not, for us 15% is a good return, provided the market is up less than that. So it's not that in absolute we don't care about what happens with the market. We want to do two things. Try to make 15%, try to beat the market. Both have to work together.
Yeah, but which is true. But does that worry you as well, Samir? I mean, the reference that you made to elections, because it is an election year. A lot of people are saying that the budget speech as well, in a manner of speaking, classified what the thinking will be in an election year as well. I don't know if you agree with the same or no, but does that worry you that returns could be impacted because of...
No, it doesn't worry me in that sense, because generally I've also read many reports or a few reports which said that the year before the election, in general, the spending or the because of elections and otherwise actually helps the economy. The growth rate is higher than the year before. Maybe some money comes back from abroad, maybe money comes from corporates or whatever, but it is spent in a number of areas where it goes directly down the line to the real public in terms of hoarding and jeeps and people being hired. And, it's a good spending because it comes out of some money which otherwise has been stored away. So that is, I think, okay, and there is historical evidence of that. I think Deutsche or somebody wrote a report on this for the last few elections. So in itself, it's not bad, and there's nothing wrong. There could be tone issues and language issues in our campaigning and stuff like that. But I don't think it's going to change the very big picture that in the end, BJP is going to win, maybe with a few less seats, few more seats. And so therefore the market will not have to rethink the whole thing. If something changes along those lines down the line, then we'll see. But right now, I can't imagine that it has gone to that extent. So it's okay.
Fair point. As an off-market question, Samir, did you invest in Bitcoins or any of the cryptocurrencies?
No, I didn't. And I've been actually very, very aggressively against it in all my seminars. I was one in Delhi on, I think, 15th of July or 14th was a Friday. And I was attending, presenting some 300 people. And the next day, and I said go to zero. And on 19th, it went up to 19,000 on Monday. And after that, it's been down. But I've been saying this Ponzi kind of thing for a long time. Of course, because I didn't have it, that makes me more angry when I say it.
Well,
but it makes no sense. It makes no sense. And the best argument I heard against the Bitcoin is that the Bitcoin effectively, which was said on one of the business channels in US, is that basically its marginal cost should be the cost of mining it. So you should go to the cheapest place in the world where there's power and set up whatever computer farm you want. And whatever cost it takes to generate a Bitcoin in that environment, you should charge a return that is available for infrastructure projects of 7 or 8% per annum on top of that, and that should be the marginal price of a Bitcoin. Why should it be this artificial value? It can still be generated in some, Iceland or wherever, or Russia, or wherever power is cheapest, where cooling is easier, and that should be the price.
Okay, fair call. Well, so far, if you sounded that bugle of caution, you're probably turning out to be right for now. Let's wait and watch if that indeed continues to be true, Samir. I had one more question, Samir. I know it's a busy morning, but just one more question before we wrap up. Typically, and please correct me if I'm wrong, but you would be a manager who would be a more bottoms-up, identifying businesses and investing thereof, agnostic of market cap. Just the way the markets have been for calendar year 18, are you recalibrating that approach? Even if you are bottoms up, now you're maybe preferring the larger, more liquid names as opposed to a strong bottom-up story which might be illiquid?
By the way, I actually argue against this idea that bottom-up means that you don't have to look at anything else. For example, bottom-up does not tell you how many stocks you should have in your portfolio. Bottom-up also does not tell you that whether you should buy a 20p for 20% growth or a 10p for 10% growth, whether you should be a value guy or a growth guy. That's a philosophical thing. So I totally agree that bottom-up, people say we do bottom-up. What does that mean? It doesn't mean a thing in life. Bottom-up does not tell you whether you should buy a cyclical stock or a secular stock. That is a view. So we say we do bottom-up, but after we have some philosophical views. And today our philosophical view would be that we would find it more difficult to add to small cap and mid cap stocks because they are so illiquid. And then markets, if they fall 20% or 15%, these stocks fall 40% independent of whether it's a good stock or a bad stock. So on the margin, we agree with you that we should go to larger mid caps or large caps. Yes, I agree. But this is not to do with bottom up and top down. This is a philosophical thing at various points as to how to play a market. Because bottom up means what? Bottom up means you know the stock, but how many should you have? Whether you've done the research, now what valuation should it have? That's nothing to do with bottom up. That's your view on accepting that valuation. The bottom up won't tell you. It'll just tell you what it is.
Okay.
So this idea, people who come and say we do bottom up research and then we let that drive our decision, it is 100% marketing.
Fair call. You know, live markets, I'm afraid I can't really talk more about this, but Samir, the next time you're in Bombay or if you are in Singapore in our studios, would love to do a chat on the philosophy of Samir Arora, the investor, as opposed to how does Samir Arora, the investor, see the markets.
Okay, thank you.
Thanks so much, Samir. Thanks for joining in today. That's Samir Arora with his thoughts. Well, not necessarily just on markets, but on a broader sense of issues as well. As we speak, the equity markets have bumped up a little bit now. 10,537, up about 0.5% higher. The Sensex about 229 points higher. Nifty Bank 0.5% higher too. So not a bad start, one would have to say. We did cool off a little bit in the immediate 5 minutes, but since then have picked up steam. I believe the market breadth too would have improved. Let's take a break though on that note. On the other side, we'll talk about some interesting numbers that have come out and what's the way ahead. Tata Metaliks, I thought, came out with a very good quarter, very interesting quarter, I might add. The Managing Director, Sandeep Kumar, joins us on the other side to talk about those numbers.
job, अरे 5 to 9 job, भाग दौड़ all the time job, the roaming वाला job, the deadline वाला job, or are you living in the market वाला job?
Life is full of options. Choose a job and earn on your own terms. Choose to become an LIC agent. It's more than a job. It's career insurance. Be your own boss. Be an LIC agent. Ab life set hai.
RB Sanjeev Goenka Group. Growing legacies.
City Union Bank. Trust and excellence since 1904. City Union Bank. Trust and excellence since 1904.
Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Business news, we're news for business people.
Well, back with Indian Open right here on Bloomberg Quinn. It's a good start. It's a very good start now. 250 points for the Sensex, the Nifty about 70 odd points, and the Nifty Bank too contributing. So some bit of weakness of yesterday's session being bought into, and it's a very strong move that we're making. Cipla is leading the ranks, really up 5%, but OMCs like BPCL and HPCL contributing, and Nifty IT doing very well. Infosys up about a couple of percentage points. HCL Tech 1.5%, I would believe, courtesy Cognizant and the commentary that they've given. But it's best that while we're talking about what's happening in the immediate term, to also talk about what's happened over the past 5 or 6 or 7 odd days. Because of the budget, a lot of important numbers came about and were not addressed in the manner that they would have been had there not been any budget. Tata Metaliks was probably one such number, reported about a 63% jump in its December quarter profits. What's also reassuring is the all-round performance from both its verticals, but with metal prices on the rise, will the leading pig iron makers' margins come under pressure? To answer this and to discuss the road ahead of the company, joining us now is Managing Director Sandeep Kumar. Mr. Kumar, thank you so much for joining in. Actually, let's start off with that question first. While the going seemed to be good, and I'll come to that in a bit, do you believe operational margin or operational efficiency challenges are have now come to the fore for the quarters ahead?
Yeah, so thank you for inviting us. You see, the operational results have been improving over the last few quarters, and these are the result of the structural cost reduction projects that we took up mostly in the last fiscal year. In addition to that, the regular improvement initiatives in terms of the incremental cost reduction projects that have also been launched in the last quarter, and therefore going forward, that's where the most of the cost squeeze is where we would be focusing on, and currently we are focused on. So in addition to the market, I think on the cost side, we need to be focusing much more than what we might have done over the last couple of years, and that's where we're currently looking at.
No, which is a point well taken, Mr. Kumar. I think everybody's acknowledged the fact that you have some quick payback, cost-efficient projects which have already happened. I think the question mark to everybody's mind was only that with the metal prices on the rise, will something that is not within your control, will that impact your operational efficiencies and operational margins going ahead?
Yeah, so for example, iron ore prices. Iron ore prices have risen significantly in the domestic market because of almost 15% of iron ore production being shut down in Odisha. As you are aware, the Supreme Court ruling for miners to pay up for excess mining in the past. So that is a temporary disruption, and that would impact, I would think, the steel makers in India. And I think yesterday we heard about the Goan iron ore mining licenses being cancelled. So that's one a red flag for us. As far as coal and coke are concerned, they seem to be rising, but now they seem to have coming down. More importantly for Tata Metaliks, I think it's important that we keep a control on coke, which is the primary input as a cost element for us. And from a level of 40% of our coke being captive, now we have long-term tie-ups with Tata Steel, and that takes care of almost 70 to 80% of our coke consumption. So a major part of the cost element is now under control. So it's linked to coal cost rather than both coal and coke volatility.
By the way, just an update, Mr. Kumar, this Goa ban, we understood that it was pertaining only to the low-cost iron ore, which is not used in India. Will that impact companies within India, maybe companies like you as well?
Yeah, so you're right. In India, the markets are regional. For example, we are impacted more by Odisha than by, say, Goa. But overall, I think sentiment and overall the exports, market, the international market does impact. For example, the iron ore prices internationally have nudged downwards or have remained more or less stable in the last, say, 15, 20 days or a month. But if you look at Odisha, the prices have jumped. So, there is a dichotomy here, but in the short term, but in the long term, I think both should converge.
Let's talk about your quarter as well. Both the pig iron and the ductile iron pipe segment, how did volumes shape up, and how do you expect volumes to shape up in let's say, just quarter 4?
Yeah, so the quarter 3 has been quite good, and despite significant cost increase, we have been able to increase our profitability, mainly on account of higher volumes. So the pig iron volumes have doubled compared to quarter 3 of last year. And there is an increase of over 25% in the ductile iron pipe volumes. Going forward into Q4, we think we should be able to, do at least as much as we did in quarter 3, if not more. In fact, we would tend to think we should do more than that. So we are quite stable at these levels, and therefore we don't see a problem as far as the sales volumes are concerned. In any case, we get into the peak season in quarter 4, which is the January, February, March, April period.
Okay. And does calendar, does calendar year 18 therefore look more solid? Because I would presume that because of GST, some of the sales would have not been normal from the April to September period of calendar year 17. Does that, was there a low base therefore, and does that augur well for calendar year 18?
Yeah, certainly. I think the impact of GST did disrupt us in quarter 3. Quarter 2 mostly, and a little bit into quarter 3. Going forward, as things stabilize, the calendar year 18 and FY 19 should be better, but we also need to take into account that there are many factors than merely demand. On the demand side, with the current budget focus of the government on water and infrastructure, that should also help the demand side. So we're looking good in terms of demand, but on the cost side, on the raw material side, it's more international driven. So it's always, difficult to say which way things will go up, move. But at the moment, things look pretty for us.
So on a YOY basis, Mr. Kumar, for the year as a whole, just going by your commentary and going by your Q2 as well as Q3 performance, because almost everybody believed that the tough phase was over and now the things would improve for Tata Metaliks. Would you believe that you would end, I mean, is there any kind of guidance that you can give us for how FY18 will look like over FY17 on the volumes front, maybe on the overall revenue front?
Yeah, so, as a policy, we don't give guidance. But as I mentioned to you, that, the volumes are looking good, and Q3 volumes have been good for us. And I think there's no reason for us to believe Q4 wouldn't also be similar, if not better. So, so at the moment, I think if you look at calendar year, the financial year FY18, we seem to be there as per our plans and as per the market expectations. FY19, as I just mentioned a little while back, the demand side looks good. Raw material will be the one to keep a watch on.
Okay. No, so just wondering, did your internal estimates, and I don't know if you have made them public or no, but did your internal estimates involve revenue growth which is northwards of 7-8% for FY18 or FY17?
So FY18 compared to FY17, there is almost, an increase of, I would say, anything between 20% to 50% in terms of sales volumes for us, depending on which product line talking about. If you're talking about pig iron, because one of our blast furnaces was taken down and a new one came up. So in last financial year, we were hit, to a certain extent for volumes. So we expanded, therefore there were increased volumes of pig iron available this year, which will continue into the future. As far as the ductile iron pipe business is concerned, that also was expanded last year. So therefore we are going to do obviously much more, and we are doing at a rate of say almost 45 to 50,000 tons per quarter. So that's the level at which we should certainly do, if not more. So for ductile iron pipe.
So doing a revenue overall sales of about 1800 to 1850 or maybe 1900 crores would not be out of the ordinary, I would presume.
Yeah, I mean, if you just kind of project what we have done in Q3 and don't take into account any major deviation in the prices, the number that you are given can be arithmetically calculated. So that doesn't look very much
ordinary. Okay, fair call. Now one last question really. At the end of Q2, you had taken steps for coke integration. You had sought shareholders' approval for sourcing about 40% of your coke requirement from Tata Steel on an arm's length basis. I mean, can you give us some details thereof? How is it proceeding?
Yeah, so it's actually helped us, because what happens is that the Tata Steel's plant is located at the port, and we have we went to the shareholders to seek approval for buying this coke for to serve almost 40% of our requirement. This is obviously on arm's length, but what it does, it gives us predictability of quality, predictability of logistics, and also predictability of, I would say, stability of prices, because it's a long-term contract. And therefore what we have seen over the last few months, that it's been helpful to us, rather than buying coke from all over the place, different quality, different logistics, which always bothers us. So this is a much better scenario for us compared to say last year.
Okay, fair call. Mr. Kumar, appreciate you taking the time out and joining us. Congratulations on a good quarter. We look forward to talking to you post your Q4 numbers as well.
Thank you very much.
Thanks for joining in today.
Thanks.
Well, that's Tata Metaliks and a fairly confident Tata Metaliks management as well. Now, the next management is HEG. Remember, the union budget introduced a 20% tariff rate on the export of graphite electrodes. This comes as a time when China has cut back on electrode production, and Indian companies have had a field run for the last few months. So does Does this move change the dynamics? Let's get a management view on this. Joining us on the phone line is Mr. Ravi Jhunjhunwala. He's Chairman and Managing Director at HEG. I presume you're traveling, Mr. Jhunjhunwala, so really appreciate you taking this time off and talking to us for the next 5 minutes. Thanks for doing so.
Thank you.
Does this in any way change the dynamics, this tariff rate of 20%?
No, it's not correct what you just said.
Okay.
They have not imposed any tariff, and as soon as the budget was passed, we started our regular exports in the normal manner as we've been doing, and there is absolutely no duty on it. What they've only done is they've put it on a schedule which has 62 other items where import duties could be placed.
Okay.
I'm emphasizing on that word. They could place any import duty, export duty, as and when they like. So that's all that they have done. And it says up till 20%. So it could be anywhere between 0 and 20%. So today, as we speak, it is 0. But putting this on that list doesn't mean much. In any case, government has the power all the time, whether they put it today or tomorrow or day after tomorrow. That power always vests with the government. So that's all there is to it.
Okay, and fair call, which is why I think the markets was a bit worried, and then the market has come back despite your numbers looking so solid in Q3 as well. So having said that, since this is not on the agenda, let's not really talk about it. As and when it happens, we'll probably touch base with you and try and guess an impact thereof. What about how business is shaping up? Because your Q3 and the numbers that I saw that released recently were fairly robust.
So we expect this to continue. I mean, we know the half of this quarter has already passed by, and we are seeing a fairly strong demand. We are still looking at strong pricing. So the current quarter looks surely better than what we did in the third one.
Wow. I mean, so does it look good only in terms of volumes, or because of that volumes, there is a natural trickle down to the operating level as well? The only reason I ask this, Mr. Jhunjhunwala, is that operationally, and maybe because of a subdued previous year, your operational metrics are just looking magnified. I mean, is there scope for improvement here?
No, there is no substantial volume growth to answer your question directly. I mean, it's a combination of volume and price. It's mainly price rather than the volume.
Okay. And so having said that, does it therefore, even if a price increase, does it augment your operational picture more than what it is right now? I mean, Q3 was about 66%, if I'm not wrong.
Yeah, it would be higher than that.
But wow. Okay. So you're painting a fairly rosy picture as well. The last time that I spoke to you, Mr. Jhunjhunwala, we spoke very briefly about what your expansion plans could have been. Now, can you throw some color thereof? I mean, are there any other expansion plans on the anvil that you have?
You see, obviously, we're given the strong market, and we believe that this current situation on the graphite market worldwide is likely to stay for some time, because it's an issue of consolidation, it's an issue of technology, and it will not be an exaggeration to say that ever since we came in this business, and that was way back 42 years ago in 1976, there has been no new company, or let's say there's no new player which has emerged in this business worldwide. So the entry barriers are rather strong, and it's a basic question of technology. So when the markets are robust, the only people who could expand would be the current four or five players, and there are just about 5 players in the world, including 2 of us in India. And again, in the last about 22 years, every incremental ton of demand which was generated for electrodes anywhere in the world has been 100% captured by the 2 Indian companies. So that is just giving you a background and the flavor of where the Indian industry on the electrode is. And from a small capacity of about 30,000 tons between us and Graphite India, Currently, we stand at about 160,000 tons. So this additional 130,000 tons that the two companies have created in India is more or less equal to the incremental demand of the world. And as you know, I mean, between the two Indian companies, we export about 2/3 of our total production. So there is basically no logic. I mean, again, coming back to your question of export duty, we are exporting 2/3 of our exports production for the last 20, 25 years. And the rest 1/3 is the total demand of this country. So what is anybody going to achieve by putting an export duty? We cannot sell more than 1/3, which is the 100% demand in this country. So obviously, if we have a spare capacity, which we have created over the last 30 years, has to be exported.
No, so, okay. So, there are two questions rolled into one, Mr. Jhunjhunwala. Final question, really. Do your capacity utilization levels allow you to increase production if there is a dearth of graphite electrodes in the country? Because I heard you mention that for now, you are satisfying all the demand that is there in the country, and therefore there is no sense of putting in any kind of export duty in order to enable the local industry to get graphite electrodes. There is no shortage, you are saying?
Yeah, there is absolutely no shortage. I mean, as I said, the total demand in this country is more or less equal to 1/3 of our production. So there is the extra 2/3 which is available to be sold in the Indian market. So there was a requirement.
Right. But if there was a spurt in demand, there is enough capacity utilization for both you and graphite. I'm just asking if you know about them as well, to increase the production and meet that demand.
So we are both currently operating at between 80 and 90%.
Okay.
So it's a fairly healthy utilization for any business.
Okay.
And as we probably spoke last time, there is a serious shortage of our raw material worldwide. So basically what is stopping us to go beyond 90-92% is nothing but the shortage of this needle coke that we keep talking about.
Okay. Fair call. Important clarifications, Mr. Jhunjhunwala. Thank you so much for taking the time out and speaking to us. Have a safe flight.
Thank you. Thank you.
And congratulations on a good quarter. Well, that's HEG, a very strong quarter as well. And one clarification, really, there was some doubts about whether there's this export duty or not. The management saying that it's been put on schedule, no duty placed as yet. The equity market's very buoyant too, 1% higher for the Sensex, almost 1% higher for the Nifty. We're having a day in the sun, quite frankly, and it'll be a good time to watch the FNO show. It's a good day for listing as well. The Galaxy Surfactants listing coming up on the other side. Thanks so much for watching this leg of Indian Open.